Can you, I mean, you see how much they have in checking, you see whether or not they have a checking account, but you can't, or can you tell whether or not they have a savings account as well?
We do know that, and we haven't, we didn't put like, do you have a checking account? We didn't, it's pretty correlated. If you have a checking, so we've looked at we've used them as outcome variables, we haven't controlled for them as control variables.
Yeah, I just think of my grandma who went through the depression, and she will use her checking account, but she still, for 10 years, put a ton of her savings. She had a savings account, but she kept another stash in her safety deposit box.
Yeah.
For a good 15 years, because of that lack of confidence. And so, are people using a checking account, or do they have one because it's a necessity, because you need to write a check for your rent, but you might not be using the banking system in the sense of
for savings
and things that.
So it's certainly the case that you're less likely to have a savings account. I think, it's roughly the same order of magnitude, but we haven't looked to see, what fraction of people, does it explain some fraction of people who have a checking account, so we're willing to use it for transactions, but probably keep a low balance. Or we could also look at the balance that you have, right? Mm-hmm. We have, I think they're noisier, so lots of people will tell you I have a savings account, but not that many people are willing, fewer people are willing to tell you how much money they have in their savings account, and then you imagine that that's just measured with more error. So, but we could do something where we kind of put it into quartiles or something and see if, even conditional on having an account, are you holding smaller balances? That would be interesting too, so that it doesn't have just the 0-1 effect in addition to kind of is it an extensive and an intensive kind of margin?
Do we know whether immigrants who are in the U.S. still have accounts back home in their home country?
No, we've looked, we've tried to look at that. With these data, we don't know. And the way the questions are structured, in principle, it could be an account someplace else, but, just because the people who designed the questionnaire were just thinking, they weren't thinking about immigrants particularly. I've done some checking of data from the New Immigrant Survey, which does have information on financial assets that are owned someplace else, and those data suggest that it's pretty rare for you to continue to have, or it's pretty rich people who would continue to have those kinds of, the Swiss bank account people. They're not going to tell you, but so it looks like it's a pretty rare phenomenon. But that's one of the things. We don't know about return migration intentions. We don't know about family members living abroad. So you may have financial ties other places. So that's an issue as well.
So even if this supposedly risk-free, I think it has such a huge effect. What's going to happen is even mildly risky assets. This is huge effect, right? It has risk-free.
It is a huge effect, but okay. So this gets back to this issue about, in a different way, about if there's a financial crisis in a country where you think things are safe, does that have a different impact? So if you lose money in the stock market, does that have the same impact on your confidence that losing money in a savings account does? Right? I mean, you might know beforehand that it's a riskier investment, so you may say, wow, I knew there was a wide range of things that could happen. I could have had really high positive returns, I could have had really low negative returns. This is the outcome that was realized, but it doesn't change my priors because I had just a wider support of that prior to start with. So I don't know. I think that's an interesting issue. But if when I think about savings, I think, well, what was the distribution of possible returns that I thought I could get? Well, it would have been from, 0, bounded below at 0 to, something high. It's probably going to vary depending on inflation and some other things as well. But it would have had a much tighter distribution, and except for inflation, I wouldn't have expected to lose money.